Did you know the average American spends over 10 hours annually dealing with tax paperwork, with many incurring thousands of dollars in unnecessary fees? Tax season can be a daunting experience for many Americans, with complex forms, tight deadlines, and the risk of costly mistakes. However, with the right strategies and knowledge, individuals can simplify their tax obligations, minimize their financial burden, and even take advantage of tax savings opportunities. One key concept to grasp is the importance of tax credits, which can be claimed to reduce the amount of tax owed. Tax credits can be particularly beneficial for low to moderate income households, students, and families with children. For instance, the Earned Income Tax Credit (ICE) can provide significant relief for working individuals with limited income. But that's not the strangest part. Did you know that the ICE has undergone several changes over the years, with some revisions resulting in reduced benefits for certain taxpayers? To maximize tax credits, it's essential to understand the eligibility criteria and filing requirements, such as the need to provide proof of income and expenses. Additionally, tax credits can be claimed for education expenses, charitable donations, and even home improvements. However, it's crucial to note that tax credits can have a limited lifespan, and some may expire if not claimed within a specific time frame. For example, the American Opportunity Tax Credit, which provides up to $2,500 in tax credits for education expenses, is only available for 4 tax years. In contrast, the Child Tax Credit offers up to $3,000 in tax credits per child, but has a more complex eligibility process and requires proof of dependence. To further simplify the tax process, individuals can take advantage of tax preparation software, such as TurboTax or H&R Block, which offer step-by-step guidance and calculations. These tools can help identify potential tax credits and deductions, reducing the likelihood of errors and omissions. However, even with tax preparation software, it's essential to double-check calculations and ensure accurate reporting to avoid audit risks. Moreover, tax credits can have a ripple effect, influencing other areas of personal finance, such as budgeting, savings, and investment decisions. For instance, a tax credit for home improvements can lead to increased property value, which in turn may boost mortgage interest deductions. Furthermore, tax credits can be used strategically to offset other expenses, such as student loan payments or mortgage interest. But that's not the only way to optimize taxes. Tax loss harvesting, for example, involves selling investments at a loss to offset gains from other investments. Tax loss harvesting can be particularly beneficial for investors with volatile portfolios or those who hold securities with significant capital gains. To execute tax loss harvesting, individuals must understand the wash sale rule, which prohibits claiming losses on securities sold within 30 days of buying a substantially identical security. Additionally, tax loss harvesting may require coordination with other financial planning strategies, such as rebalancing portfolios or adjusting investment allocations. As a result, tax loss harvesting is typically best suited for more complex investment portfolios or those with significant capital gains. In contrast, tax credits offer a more straightforward way to reduce tax liability, without the need for intricate financial planning or portfolio management. Tax credits can also provide a sense of security, as they can be claimed to offset unexpected tax obligations or audit liabilities. For example, the premium tax credit can help individuals with moderate income offset the cost of health insurance premiums, providing peace of mind during an uncertain time. Moreover, tax credits can be used to promote social and economic mobility, as they often target low-income households or vulnerable populations. For instance, the child tax credit can provide much-needed financial support to families with children, helping to alleviate poverty and inequality. In this way, tax credits can have a lasting impact on individuals, families, and communities, influencing long-term financial stability and social outcomes. However, the effectiveness of tax credits depends on various factors, including the tax system, economic conditions, and demographic trends. As a result, policymakers must carefully consider the design and implementation of tax credits to ensure they achieve their intended goals. Tax credits can also have unintended consequences, such as creating new tax burdens or distorting economic behavior. For example, the mortgage interest deduction can incentivize homeownership, but may also lead to increased housing prices and reduced affordability. In contrast, tax credits for education expenses may promote educational attainment, but may also create new tax burdens for individuals or businesses. As a result, policymakers must weigh the benefits and drawbacks of tax credits, considering the broader economic and social implications. To navigate the complexities of tax credits, individuals can consult with tax professionals, use online resources, or participate in community outreach programs. Tax credits can also be a valuable teaching tool, helping individuals and families develop financial literacy and planning skills. For instance, tax credits for home improvements can illustrate the importance of budgeting and savings, while tax credits for education expenses can highlight the value of investing in human capital. In this way, tax credits can have a lasting impact on individuals, families, and communities, promoting financial stability, social mobility, and economic growth. So, what can you do to simplify your taxes and maximize your tax credits? First, ensure accurate reporting and documentation, using tax preparation software or consulting with a tax professional. Second, explore tax credits and deductions, using online resources or participating in community outreach programs. Third, consider strategic tax planning, such as tax loss harvesting or rebalancing portfolios. By following these steps, you can optimize your taxes, reduce financial burdens, and achieve long-term financial stability. So, subscribe to our channel for more practical tax tips and financial advice. And don't forget to like and comment below with your questions and experiences. We're always here to help you navigate the complexities of personal finance and tax planning, providing you with the knowledge and skills to achieve your financial goals. If you found this informative and engaging, subscribe to our channel for more practical tax tips and financial advice.